It's Monday, January 19th, 2015, Martin Luther King Day. First name I want to take a look at here is Netflix. Netflix has earnings after the close tomorrow, and I want to talk about what the stock needs to do to trigger a move of some kind here. So you're looking at a daily chart right now, but I'm going to swap this out and look at a weekly chart, because it's pretty interesting to me what's been going on in Netflix. Over the last year and a half, really, Netflix has been in a very wide channel between 300 on the low end and 450 on the high end. You had a couple moves above 450 in April and July, August of last year, but those were kind of exceptions. You can see it didn't spend much time above 450. So for the most part, I consider Netflix to have been between 300 and 450 over the last year to year and a half. So my first takeaway on Netflix is that right now it doesn't have a trend. Yeah, in the longer term you could still say it's in an uptrend, but as a short-term trader, I would say Netflix really doesn't have much of a trend, and it's anybody's guess where it goes next. So just want to point that out on a longer-term weekly chart. You haven't had a trend for the last year to year and a half. So in the short term, what I'm looking at on Netflix is this downtrend off of the all-time high, okay, on the stock, which I know it's a far ways away right now, but Netflix has a propensity to move 50 to 80 points on earnings sometimes. So this downtrend line is up around 380 going into this week. Okay, Netflix is at 340. So if Netflix has a positive earnings reaction, you could see it knocking right on the door of this uptrend line, downtrend line right here, trying to get above it. Okay, if you can't break out above this downtrend line, though, the short-term picture on Netflix is, to me, to the downside. This is a stock that, since it made its all-time high, you've been putting in lower highs and lower lows. Your first lower high came in October when you broke down below 450. Then you had a big gap down off of earnings to get a lower low in middle of October. Then you rallied off of that, but you stalled out just underneath 400. Then you made another lower low in December below that October low. You've bounced up, but you stalled out around 350s on that, and now you are kind of channeling. So in the short term, tomorrow after hours, what needs to happen on Netflix to get direction is we either need to get above this 350 area, or we need to get below this 320 area, 320 to 315, which has been providing support. If Netflix doesn't get out of the 350s to the upside and doesn't get below the 320s to the downside, then this is still just a channel on the short term, and I've already discussed that it's a channel on the long term. So the key thing for Netflix, for those of you that trade it, is you need a breakout either above 350 or you need a clean breakdown below 320. Anything in between will just be a continuation of the recent channel and will be a channel setup, and you can decide, do you want to short it near the top end of the channel, try and go long near the bottom, or just let it do its thing in between. I generally prefer to let stocks figure themselves out while they're in channels and try and trade direction. My live trading members, you haven't seen me trading Netflix much over the last month, and the reason is because of the fact that you're more or less flat over the last couple of weeks and over the last couple of months. Anyways, so just not much there. But with the earnings tomorrow, I expect that to change, or at least I hope it changes. Hope we get out of this range and start getting some directional movement, because when Netflix picks a direction, she is a very good mover overall. So watch for either that 350 breakout or that 320 breakdown tomorrow after hours to give us a setup on a directional basis come Wednesday morning. Next name I wanted to look at is Tesla. Now Tesla has had some very good direction recently, and that direction has been to the downside, pretty clear here. And you are testing 1-year lows on Tesla. The 52-week low is down around 178. You say, hey, we're still 15 points off of that low. Yeah, well, Tesla just dropped 15 points in one day this week, so I'm going to say that it is testing 52-week lows, even though it's 15 points off of that low. Something caught my eye here on Tesla this week, and that is with this gap down compared to the previous gap down. So I'm going to compare this circle here, which I'll call number 2, to this action here, which I'll call number 1. Number 1 and number 2, very similar. Both of them had downtrends, okay, and then both of them came down to the 200 level, and both of them, once they got to 200, didn't break down below 200 intraday, but instead gapped below 200. Okay, you can see both gapped below 200 instead of breaking down beneath them on an intraday basis. The difference is number 1 here and number 2 here. Number 1, you got above 200 right away the next day, right? If you look, you gapped down and closed below 200 on December 16th, 2014. 197 was your close. Next day, you closed at 205. That triggered a bounce. Here, however, with number 2, you gapped down below 200 on January 14th, this past Wednesday, closed 192, and the next day you stayed below 200, and then the next day on Friday you stayed below 200 again. So some different characteristics going on in the stock here on this test below 200 than the previous test below 200. And if we went back further and looked at the test in May below 200, which I'll circle right here, you'll see that it did stay below 200 a couple days, yes. However, the one close on May 8th at 178, that was its low. Every day thereafter, it then went on to rally 4 days in a row, pulled back just a little bit on May 15th, and then started to rally again. And overall, after it lost 200 on that time, Tesla rallied something like 12 out of 14 days, okay, and then recovered back above 200. So my takeaway here is that the price action is a little bit different. Previous times over the last year when Tesla's come below 200, the market's been willing to buy it up pretty instantly. We've seen buy the dip players come in and push the stock back up. Right now, for whatever reason, we aren't seeing that yet. Maybe we see it this week, maybe we don't. My takeaway is we haven't seen it now, and that's something I'm noting. To me, that signals that, hey, maybe this time we actually do confirm a breakdown and trend lower. So my bias on Tesla, my reaction to this price action that I'm seeing is that while you're below 200 bucks, Tesla actually wants to go lower and test that 178 low and possibly break down, go towards the 160s. So keep an eye on Tesla for further downside here if she is unable to show that bounce back above 200. Once you get back above 200, if that can happen, then Tesla starts looking solid for stability, and it's the same thing that it's been on the previous tests below 200. Ends up being a buy the dip play. But to me, the long trade on Tesla is on hold until you get back above 200. Personally, I've been in and out of Tesla in my IRA account over the last few years. I have a small position now. I have an order sitting at 175. I was talking with my dad. He's like, why aren't you just buying it right here? Well, because as long as it's below 200, it can go to 175. Once it gets back above 200, then I'll buy back in if it starts showing stability. But I'm not going to buy it while it's just below 200 just to maybe get an extra 7 points buying at 193 versus buying at 200 or 201. I'd rather wait for the certainty that comes with stability back above 200, because if you don't get that, I've got confidence my order at 175 has a realistic shot at getting filled. I want to touch on two stocks that we looked at in this space this time last week that still look solid, and not going to spend a whole ton of time, but AGEN. Last week, this is all we had right here. We had just made this big gap up move above $5. Then to start the week, we gapped up above $6 and then ultimately pulled back. But what I like about AGEN is we went into last week saying, hey, anything above $5 has AGEN looking good to the upside. Well, it didn't even come close to $5 this week. It hung out around $5.50 for the most part, and still looks pretty good to me. So now I think you can start looking at AGEN versus $5.50 for further upside trade, targeting a move back above $6, and more intermediate term, $5 remains the key level. But AGEN, guys, for you small cap players, keep your eye on this one, because it's held $5 well, didn't even come back down to test it. There's a big volume drop off, yes, but the price is holding well. It would have been a red flag if, like the last time we got a big volume drop off back here in July, the price went down a lot, okay, but that has not happened. The price, yes, it went down from 6 to 550, but before that it went up from $4 to 6. So I'm not going to, nitpick it. I don't have a real problem with that pullback. I think AGEN, you might see this thing at $10 here in the next few months if she's able to continue holding up this well. Back below $5, and I would look for a hard pullback, but I would hold off on any short trades trying to short this one as long as you're holding $5. Just like I would hold off on any long trades on Tesla as long as you're below 200 from a psychological perspective. I say the same thing about AGEN. On the short side, hold off on the short trade as long as you're above a psychological level like $5. Another one, similar setup here, ARNA, ARNA, trades more volume, so for you guys that like the more liquid names, ARNA is maybe the one to go with, but very similar. Came above $5, got up towards 6, pulled back off of 6, but you know what? You held 5 all week, and that's a good sign to me. So I like your setup on ARNA as long as you continue to hold $5. I think this name can go higher, and again, if you lost $5, that's when the short trade would come into play. So ARNA and AGEN, two nice simple setups in the small cap space. Nice round levels relative to that $5 mark. Looking at gold via GLD. GLD has been beaten down over the last few years. Going to look at a weekly chart first to show this downtrend. You can see it, from a peak near 180s back in 2012, now all the way down around 120. You were even down near 110 just a few weeks ago. So GLD has been in a downtrend over the last 3 years, but if you were to look at a monthly chart, you would see a long-term uptrend still, still intact in my opinion, and now you're possibly basing out here, and we're going to go back to the daily, because the daily is kind of what shows a breakout potentially in the works here on GLD. For the first time in a while, you got some higher highs and higher lows in GLD. Your low was in November, and then you can see you got a higher low in early December, then another higher low just now at the beginning of this year, and then you look, you had a higher high in December relative to your November high, and now you just got above that December high this past week, and you closed at 3-month highs here on GLD. So GLD looks to have broken out, and this may have now shifted to a buy the dip play on GLD, which for anybody that was trading gold back in 2010. That was a great buy the dip market. We're looking at a weekly chart now just to show you guys that weren't trading back in 2010, 2011. I mean, look at this thing. This thing went from 80 bucks, 60 bucks in 2009, 2010, all the way up to 180 in 2011. If you were trading during that time, you know how popular GLD was. I mean, it was all anybody was talking about. Gold to 2000, gold to 2000, gold to 2000, and then of course that's when it topped. Well, what I like about this recent move up is you're not hearing nearly as much chatter with it. You don't have the same types of calls being thrown out there. A lot of people got burned on gold the last few years, so it actually now maybe looks like a pretty sweet contrarian play to the upside given the recent price action and given that sentiment towards gold, at least in my unscientific point of view, from my unscientific point of view, is still pretty negative, or at the very least certainly not positive. So give gold a look, give GLD a look. It is a good name to swing trade. The options are very, very liquid. There's tons of strikes you can choose from. Give it a look maybe on a dip back towards 118 to 120, as that was the highs of December and your highs this month before you just broke out on Thursday and Friday. So now you want to see 118 to 120 act as support. To me, if you lost 118, then that would kind of negate everything I just said about the upside coming back into GLD, and then target a retest of the lows between 114 and 110. But I like GLD. I'm favorable towards it while above 128, 118. I think you can be buying dips, and I think ultimately you're going to go up and test the July highs up near 130. We could have a much longer discussion on GLD from a longer term perspective, but let it play out week over week, and then we'll revisit it next week and see what it's doing. Looking at the S&P 500 here via SPX, I'm not looking at the SPY, I'm looking at the actual index here. So things are getting interesting on the market because we continue to dance with this 2000 mark. If you just put a line at 2000, you can see that we've now tested it 3 times within the last month. And on Friday we were able to hold it, and maybe you have a higher low versus the December low, but there's some interesting cracks potentially going on beneath the surface. You just had a 5-day losing streak in the S&P, and then prior to that you had a 5-day losing streak as well to start the year. That's 2 5-day losing streaks to start the year, right? Well, I'm just going to go back here. You do not see a 5-day losing streak in this market, I don't think anywhere, over the last year. All of 2014, in fact, you went without a 5-day losing streak. You'd have to go back to December 2013 to find a 5-day losing streak. Okay, so just find it interesting that for a whole year we didn't have a losing streak of that kind, and then we got 2 of them within 3 weeks. Again, that's kind of a situation where I don't know what it means, but I just make note of things like that because maybe something's changing here. You know, the market's not as strong as it used to be. The main thing here that I'm watching for is this possible lower high that we just came off of, where you had the all-time high just underneath 2100, and then you pulled back down towards 2000, and then you bounced up towards 2060, but you got rejected there and pulled back towards 2000 again. So a possible lower high. What you need to confirm that lower high, though, is you need a 1970 breakdown. The market, while vulnerable, is not going to get into serious trouble until it breaks 1970. As long as you hold 1970 on the S&P, that's the December lows, 1972.5 to be exact, I just call it 1970. As long as you hold that area, you are not going to be in a ton of trouble on this market, in my opinion. So that's the level to watch on the downside. The level to watch on the upside to me is last year's close, 2058. You need to go red to green on the S&P to really trigger a big move or a continued momentum move to the upside. So watch for a red to green move on the year. It could be similar to Netflix, for instance, that we just channel between 1970 and channel between break even on the S&P, and you want to maybe look to play this channel for the foreseeable future. Hopefully earnings knocks us one way or the other, but just be mindful of that. This is the channel that we're currently in. I'm trying to avoid predictions, so I don't know, is it going to go down, break 1970? I don't know, is it going to go up, break out above the break-even line? All I know is if you get above the break-even line, I'd look for more upside, and if you start pressuring 1970, then it starts to look like a breakdown. And I want to go back and look at last year, the beginning of last year, as for why I'm referencing that break-even line so much. So last year the S&P closed at 1848, and I just want to mark a trend line here at last year's break-even price just to make this point to you guys. So the trend line you see drawn right here is the 2013 close. And look at how last year, look at how that close really rejected the market multiple times during the month of January and ended up setting up a pretty good dip into February before bottoming out. So maybe it'll be the same thing here. We're again possibly getting rejected at the break-even line to start the year, and looks like maybe we've had some dip action. But then look at once we finally got above that break-even line in March through May, it was a real nasty consolidation. If you were trading March through May 2014, this was a tough time to trade because you just didn't really go anywhere. But look though, once you started getting stability above that break-even line, that set up a very powerful breakout from May through August, which of course they say sell in May and go away. Well, if you did that last year, you missed out on a nice move. But my point is that didn't happen until you were able to get stability above the break-even line on a year-to-date basis. So that's why this year I'm really talking about this 1958 line, because that is your break-even line on the S&P for 2014. So if you can go red to green, maybe you can then get that powerful move to the upside, just like we saw it in 2013 going into 2014. Looking at Apple, last week we looked at Apple in this space and we talked about this channel off of 105, and we said look for a bounce off of 105, but you need to get stability above 110 to then go up and challenge 115. Otherwise, if you can't get that, you might have a lower high and you look for a 105 test again. Well, that's exactly what happened. We bounced off 105, but look, we've got this lower high right here, LH, versus the late December high. Okay, the late December high was more or less 115, and the high so far this year is 113. So potential lower high right there on Apple, and now we're testing this low right at 105, which is your low for the year so far. So Apple getting interesting. Can you hold 105? If you can, look for another bounce back up towards 110. But if you break down at 105, that would be a 2-month low breakdown. Apple starts to look like it wants a 100 test, and what happens at 100 would be very important. So Apple's in an interesting spot here, kind of walking the tightrope, and might get a breakdown, might get a bounce. I think before you commit to Apple on the long side again, you look for that 110 hold. This week you closed above 110 a couple of times, but you had a lot of volatility with that. Okay, if I'm just going to mark kind of these 4 days right here, you got above 110, but then each day you tested 110, you went into the 108s on the 12th, came back up, you went into the 108s on the 13th, came back up. So if you get back above 110 again, you want to see a lower volatility test to signal that there's not as much indecision right here. When you get wide volatility, that's the market telling you there's a lot of arguing going on. There's a lot of supply, there's a lot of demand, there's a lot of money changing hands. That's the only way you get super wide ranges, and that just kind of clouds the outlook a little bit. So if Apple does bounce up towards 110, you want to see lower volatility, as that would be a sign that the market is kind of more committed to a disagreement, less of a disagreement. And ultimately, to go higher, you can't have disagreement. You need the market to agree that Apple should be higher. So you want to see tighter ranges around 110 the next time in order to set that up. And if you say, well, what are you talking about, tighter ranges? I would just point you to this action here at the beginning of November. We weren't above 110, but we were just underneath it. Look how tight the ranges were in that stretch here in the beginning of November versus our ranges here that we just came off of to start the year relative to 110. This stretch was a very low volatility stretch near 110, and you ended up breaking out to the upside. This other stretch, very high volatility stretch relative to 110, you ended up coming back down. So that's something I look for at round levels. How much volatility is there at key levels? Okay, those are the plays that I had to go over on my list and some of the ones that were sent in by you guys. So are there any questions on anything? Priceline outlook. Okie dokie. So Priceline is testing 1,000 bucks. Priceline is at 52-week lows. I mean, a rule of thumb for me is anytime a stock is making 52-week lows, you've got to say that it's in a downtrend, and that's what it looks like to me Priceline is in. So to me, you know, the outlook is to the downside until the trend changes. The trend is your friend. Priceline has been making lower highs and lower lows for a while now, since August at least. And if we went back further and looked at a weekly chart, you'd see that Priceline started making lower lows and lower highs dating back to March, February of last year. So Priceline now, your setup here is just all about 1,000 bucks. What's happening at 1,000? Are you holding 1,000? If you are, you can set up for a bounce. The problem for me with Priceline is it now has a lot of previous levels that were potential support that now come in as first layers of resistance, starting with 1050, and then next would be 1100. This pocket in here on Priceline, I'm going to mark with red because that's where I think it can bounce to, but that's also where I think you look at it as a short on a net basis, anywhere between this 1050 and 1100 mark. I think it makes sense to maybe get back into that range and retest it here and see if it does act as resistance on a bounce off of 1,000. 1,000 is just a psychological level that my reaction would be, okay, you're probably going to get a bounce at 1,000, because you've got to have some people stepping in here and being like, well, 1,000 bucks is a good spot for Priceline psychologically, and it's down 30 some odd % from its all-time high, so I'm going to step in here. I'll let those people do the deed. I won't. So while I think you can bounce off of 1,000, I would view 1050 to 1100 as a short range, and I wouldn't feel good about a bottom being put in on Priceline until you were able to get stability back above 1100. You need to get stability back above 1100 to set up a bottom on Priceline. Otherwise, she remains vulnerable. If you aren't even bouncing off of 1,000 bucks, got to go back a little ways to see where the support is, but you have lows around 970 down to just about 900 from August through October of 2013. So that's ultimately where I think you could go on Priceline, is down towards that 970 mark if you're not holding $1,000. But right here, right now, I would say bounce versus 1,000. Lose 1,000, no bounce. If you do bounce, 1050 to 1100, start thinking about shorts, looking for an entry, depending on what the price action is looking like. Any other questions? Okay, not seeing any other questions here, so I'm going to call it